What's going on, fam? Thank you for taking the time out to watch this video. Today I got an article coming out of Bloomberg. Today's topic is living the crypto life, what that means for you. How did crypto change your life? And that's what I want to hear about. So let's dive right into it. Time is money and money is time. Here's an article out of Bloomberg. Markets, America's full show. So this is Bloomberg's markets on altcoins. Let's check it out, see what they got to say. I'm going to go ahead and press play, blow it up.
More than halfway through the trading day in New York, stocks rallying and rallying fast. It's a retailer versus tech story, except today, both are on the same side. I'm Kriti Gupta. Bloomberg Markets starts right now. Session highs for the stock market. Green on the screen, and it's not just any marginal move. The S&P 500 up over 2%. The markets are rallying, and they are rallying hard, up 2.2%. But take a look at this. The NASDAQ, even the Russell 2000 outperforming. That tells you right on the surface it's a momentum trade. But what is actually driving it underneath the hood? It's all about the retailers. It's all about the tech story. Take a look at this. Macy's, Nordstrom, both coming out. I'm putting Nordstrom out there because we heard about it earlier in the week, but Macy's really driving the trade here, saying those inflation concerns, we might not be that worried about it simply because our consumer can handle it, especially if you are making just a little extra money. But take a look at this. Even in the face of bad news, Nvidia, Apple, they're still rallying. Nvidia saying, well, they're actually concerned about the supply chain issues, the COVID lockdowns in China. Apple saying their production might actually be flat. But take a look at this stock. Just on the surface, you wouldn't tell that anything's wrong with it. Let's start with the retail story, though, because that really seems to be what's driving some of this momentum. A sigh of relief for the stock market. Bloomberg's Caroline Hyde interviewed Macy's CEO earlier today and actually joins us now.
Yeah, I had a great sit down with Jeff Gannett, of course, on the phone. And really, here is a man who is managing to weather the inflation concerns, the supply chain headaches, by having the right item at the right time at the right price for his various consumers. Remember, Macy's is Macy's. It's also the higher-end Bloomingdale's. You've also got Bluemercury from the more luxurious face care and the like. And when we sat down, he really was saying, look, they batch people by income bracket. And even those with sub 75,000 in earnings per year are managing to still want to be spending. In fact, spending more than they've seen in about 4 years across the income brackets. Yes, they are worried perhaps in the future that the pocketbooks will be hit of the lower income, particularly as you see inflation, as you see the rents increases, groceries increases. But right now, here he's saying the consumer is healthy. Take a look at this, saying there's more active customers than we've had a year ago, and it's the highest in 4 years. Their spend is up. He did say, look, they're keeping very vigilant, worrying about the income levels of those on the lower end, worrying about the higher end being impacted actually by the stock market moves, Kriti, and whether or not that will pull back on spending. But for now, they haven't seen that, and they're really determined to have the right item at the right price.
You know, Caroline, it's fascinating that we're talking about this at a time when we're also talking about supply chain issues, because this is something that Nordstrom really excelled at too. They said that consumer, that worry that we were talking about, might not necessarily be that relevant for us, but the supply chain story seems to be relevant for Macy's regardless. What did the CEO say about that?
Well, actually, they managed to keep their inventory levels relatively down. I mean, they're up about 17% versus this time last year, but a lot of that is because the changing tastes of what we are now buying. We're full up of our leggings, our pants, our tracksuits. We don't need that sort of a purchase. So that's where the inventory levels are, and perhaps that's where you're going to see some sort of sales going forward. But actually, they're saying of late, in the last year, the supply chain has actually been much better than they expected. Importing from China much swifter in terms of actually getting your ready-made goods in whole and at a swift pace. He, though, did warn of clouds, dark clouds, storm clouds. When he's looking at what's happening in Shanghai right now, the backlog, when that comes to the East Coast, when it comes to American ports, he's worried that could have an impact.
Well, that China story is very crucial. Bloomberg's Caroline Hyde, thank you as always. It's very relevant, by the way, to what's happening in the tech space. Let's turn there, which is also, by the way, helping fuel today's rally. Let's start with some deal news, though. Broadcom agreeing to buy VMware, forget this, $61 billion, one of the largest tech deals of all time. Joining us now is Woo Jin Ho of Bloomberg Intelligence. Woo Jin, let's talk about this deal, because it is fascinating to look at the chip maker more and more diversify. And this isn't the first time. You're seeing NVIDIA do the same. Is this going to be the start of a new trend when it comes to chip makers trying to perhaps become a little bit more insulated from the boom and bust cycle?
Sure. Thanks for having me on, Kriti. I think Broadcom to some degree is unique in the sense that they've embarked on this software diversification journey back in 2018 as it relates to the CA acquisition, and then follow to that the Symantec Enterprise acquisition. And now with the VMware deal, they're an even 50-50 split from a chip to a software dynamic. If you look at some of the other software type of acquisitions that the chip makers have made, it's more of an add-on functionality as to their chips, and then it's going to be following these longer broad trends from a chip making perspective, whether it's going to be AI software or machine learning software. But inherently, from a chip maker standpoint, it's someone like an NVIDIA is still going to be a chip making, follow chip making cycle.
I'm so glad you brought up the NVIDIA of it, because we were just talking to Caroline Hyde about the China piece of the retail equation. Now I have to ask about the China piece of the tech equation. Of course, NVIDIA saying that it has this record demand, just can't meet that capacity because of those lockdowns. How much of that can we expect across the sector?
Sure. So we've actually started to see signs of the China lockdowns hitting the chip sector, and hitting it pretty hard. I mean, last week when we saw Cisco's results, the supply chain lockdowns or the supply chain disruptions affected forward guidance by about 8%. So they actually had to bring down their guidance relative to consensus expectations. VMware, even though they didn't have an earnings call, but when I was looking through their numbers today, they missed numbers primarily because their hardware partners were unable to supply the servers that go along with the software. So I do think it's going to be a broad-based, extended disruption to the hardware makers and to broader tech. And it's not independent to the hardware makers, but it's also affecting the entire demand chain.
Woo Jin Ho of Bloomberg Intelligence, always a pleasure. Thank you for breaking down really just a historic moment in the chip space. Time now for Bloomberg's First Word News with Mark Crumpton. Mark.
Thank you so much. U.S. Secretary of State Antony Blinken said the U.S. is ready to increase communication with Beijing, while under Xi, China has become more repressive.
Rather than using its power to reinforce and revitalize the laws, the agreements, the principles, the institutions that enabled its success so that other countries can benefit from them too, Beijing is undermining them. Under President Xi, the ruling Chinese Communist Party has become more repressive at home and more aggressive abroad.
Leave a comment down below if you think this guy is a tool. I think he sure is a tool. I think Bloomberg magazine has an agenda, and their agenda is a false narrative to what we as a people can do to prevent what is really going on in the real world. So, I'm not for left or right. I've always been an independent / open-minded thinker, and that's where I get the name for my LLC. My company is Open-Minded Bitcoin, because I'm open-minded about everything. But do I believe what these people are thinking? Hell no. Excuse my French if there's any kids listening, but hell no. Let's just listen to what these I don't want to use name calling, but let's just listen to what these people, these tools, have to say about what's going on in the world.
Secretary Blinken went on to say the U.S. is not seeking to transform China's political system, but businesses can't sacrifice values for access to the country. U.S. corporate profits fell in the first quarter by more than in almost 2 years. The overall economy shrank in the period. According to revised data, inflation-adjusted GDP.
So wait, he just said it just fell, but yet, on the other hand, they're telling us everything is fine, go out and live your day-to-day life. What I'm here to tell you guys is from the bottom of my heart, from what I've been researching, because I have lots of time. Living the crypto life gives you time to research. It gives you time to study. It gives you time to understand what's going on in the real world. Be prepared and not scared. Let me know in the comments where you heard that phrase from. If you don't know, reach out to me on my Patreon channel. It's only $5 a month. If you join the $10 a month, you'll get early access. You can ask me any question and I'll answer it to the best of my knowledge. If I don't know, then I'll research it and I'll answer it for you. So let's finish the video.
GDP decreased at a 1.5% annualized rate. Corporate profits decreased an annualized 2.3% from the prior quarter. But last year was the most profitable year for American corporations since 1950. Former President Donald Trump must answer questions under oath. New York State's appeals court upheld a ruling enforcing subpoenas for Mr. Trump and his two eldest children to give deposition testimony in Attorney General Letitia James's probe into the family's business practices. James, a Democrat, said her investigation has uncovered evidence the Trump organization used fraudulent or misleading valuations to get loans and tax benefits. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
This is Bloomberg Markets. I'm Kriti Gupta. Fed minutes out this week show that officials are prepared to raise interest rates by, get this, another 50 basis points at each of their next two meetings, something the market kind of expected. Part of that tighter monetary policy is aimed to take some heat out of the housing market and appears to be working. Pending home sales fell in April for a sixth straight month as steep climb mortgage rates added to affordability challenges. For more, let's bring in Claudia Sahm, founder of Stay at Home Macro Consulting and former Federal Reserve economist. Claudia, thank you as always for joining. I'm curious though about this housing story. I mean, yes, you do start to see perhaps a slowdown from the massive move we did see, but the supply demand imbalances are still very much there. What's your take?
Right. Well, absolutely, imbalances are there. There have been for years and years. We're not building enough housing, right? So that has been a pressure on affordability. Now, what the Fed can do is take some wind out of the sails of demand. And we clearly saw mortgage rates going up. We're seeing that demand soften up, but the Fed cannot build houses, right? Like, there is a limited ability to deal with the imbalances, and I think there's really good research that is showing some of those imbalances on the supply side. People have been moving around. The world changed a lot in terms of working from home and geography. Those things are going to take time to work out in terms of building. So
I think that's a totally fair point, but I also have to ask about what this might signal for the broader economy. I think that a lot of the argument here is that if you start to see perhaps a housing slowdown, is the rest of the economy inevitably going to follow? And I have to ask you, even in those FOMC minutes, a headline I feel like just that got buried was that a lot of the Fed officials looked at Q1 data and said, this is not indicative of where Q2 will be. In fact, they were more optimistic about the strength in the second quarter. Is that a view that you share?
Right. So the two parts here. First, the housing sector is one of the more interest-sensitive sectors. So the Fed is going to look to it as it's starting to have an effect, right? So that's good. In terms of the strength, I absolutely agree that the first quarter is giving us too weak of a signal, right? And how you can see this even in the data is if you look at the consumption data, the business fixed investment together, so taking out inventories, taking out net exports, that looks really strong in the first quarter. And that is always a much better signal of where things are going. And frankly, the Fed's got to get that to cool off a little bit too. And that is not what's in the first quarter data.
It's interesting that you mentioned that the first quarter was kind of an anomaly. And then if you even look at the markets, I know you're an economist, but stick with me here. A lot of this volatility is ultimately pricing in a recession. But I'm wondering what drives an economy from, say, a 2% growth clip to a contraction to negative territory. What could be the biggest weight on that change?
Wow, what's the biggest downside risk right now? I guess I'll start with the fact that I don't think that we have a clear recession signal here. The labor market is very strong.
Oh, bullshit. This lady knows we are in a recession. We are in the biggest economic depression since... Leave a comment down below since the last time we were in a recession/depression. And let me know what you guys think.
And like getting stronger, right? So we need to see that weakening before we get too worried about a recession. I still think, the biggest downside risk to the economy is the Fed and other forces unable to get inflation out of control, because they're going to keep tightening the screws until inflation starts coming down. We'd like to do that in the least aggressive way possible, but that's not a given. I mean, that is going to be a serious issue for the Fed to get under control.
Well, speaking of getting some,
just my thoughts. I don't think the Fed can get it under control. What they're doing is they're basically delisting the fiat currency as the monetary supply of an asset, or basically taking our fiat dollar and turning it into garbage in layman's terms. And they have no idea what they're going to replace it with. Well, I'll tell you what they can replace it with, and that's cryptocurrency, Bitcoin. And they're afraid of it. If you talk to anybody on the interwebs, and they will tell you that Bitcoin, cryptocurrency, is a lifeboat to get out of the dying debt-based fiat system. Let me know what you guys think in the comments. Leave a comment now, leave a comment down below, and tell me what you think.
something under the control, I'd really like to talk to you about the dollar, because you mentioned at the start of the segment the export part of the equation. As we look at a potentially stronger dollar, not necessarily today, but in the grander scheme of things, the dollar might be kind of a hurdle to that American export capability at a time when a lot of American exports are actually attractive, from agriculture to commodities to defense weapons, even as well. Speak to us a little bit about the dollar story.
Yeah, so wrapped up in the dollar is both the interest rate increases with the Fed. I think the other thing that's going to be really tough on exports is we see a global economy that's really softening. Right, the United States, because we had such a fast recovery, so much extra money pumped in, we actually have a lot more of a cushion than other major economies. I mean, Europe and China both have real signs of softening. You got to have, buyers for the exports, right? In addition to it not getting more and more expensive. And, the import prices, these absolutely pass through to domestic inflation, right? So there's a lot of things going on globally that are risk factors to the United States. But again, at least on the demand side, we have some cushioning, but there are absolutely sectors, with export sectors, that is, it almost has to.
I want you guys to read her name. What does it say? Claudia Sam, stay at home. Marco Consulting founder. What the hell does that mean? Stay at home. Is she still stuck in the whole stay at home, get your jab, not go out and be a part of the public? I don't understand why her name, underneath her name, says stay at home. Why do they want you to stay at home? Think about that. Really sit there and think about it. Leave it in the comments of what you guys think about stay at home means and why these people are talking about it, and then saying we're not in a depression, we're not in a recession, we are in an inflationary environment, but nowhere close to a recession. Well, if you watch any YouTuber slash economic ninja slash I allegedly slash all these other people that are into economics, they all say we're in a recession. We're going to a Great Depression. So how do you combat that? The first thing you do is be prepared and not scared. You stock up on canned goods, you stock up on rice, you stack up on things that won't expire very fast that are healthy. So even if you got to go to MRE, so if you guys don't know what MRE is, that's like uh, food for the army. That type of stuff, and you stock up and be prepared, not scared. And then when all these people that are defaulting on their loans, you have dry powder put away so you can invest and buy what they're selling, because they're going to be selling it. I mean, they're going to be selling their homes, their houses. I mean, homes, their investments, their gold, their silver, their everything, their cryptos. They're going to sell all that just because they don't understand what's coming, because these people are lying to the everyday average American, and that's what this channel is all about. I want to bring attention and awareness to what's really going on in the world. And if you go to the marketplace like I went to today and yesterday and the day before, because certain foods only last so long. Unfortunately, I like bacon, so I try to find the best type of bacon. I try to find the best type of bread, the best type of whole foods that are non-GMO, non-antibiotic, you know, healthy for you to eat, and they're hard to find. I went to look for organic grapes. They were there one day and gone the next. So these are the things you got to be prepared for. If you can grow your own garden, do it now. Um, I'm going to reach out to the farmer's world and shout out to Farmer John. He is a farmer, so he understands what's really going on. Hopefully you're watching this, Farmer John, and you can put in the comments what's really going on in this world and let us know what you think, since you are a farmer, of where we're heading in the United States of America. So I'll continue playing this video. If you guys get too bored, you can always fast forward it, come back, fast forward it later. They are going to go into altcoins and cryptocurrencies, and then after that, I always start with the doom and gloom, and then I start with, after that, I'll finish up with what's great, what's really happening in the how can you prosper from a time like this. All right?
Hit them hard. Yeah, for sure. And of course, we're going to see and watch the ripple effects. Claudia Sahm, founder of Stay at Home Macro Consulting and former Federal Reserve economist, we thank you so much for your time and for your insights. As always, still ahead, though, we stick with Fed, we stick with the dollar, and we even go to the digital dollar. Vice Chair Brainerd testifying on Capitol Hill today, discussing crypto and regulation. We speak to Congressman Stephen Lynch as well on establishing a digital dollar and the need for that regulation. That conversation next. This is Bloomberg.
Pluck Bloomberg.
This is Bloomberg Markets. I'm Kriti Gupta. As the war in Ukraine persists, security remains a key concern. Bloomberg's David Weston spoke to U.S. Assistant Secretary of State for Diplomatic Security Gentry Smith earlier today. Take a listen.
Kyiv is a spot that we are having discussions about now. We are happy that that we have been able to go back in and reestablish operations there. But as I stated, we're functioning in over 250 locations around the world. So every day, we're talking about those locations, what we're seeing on the ground, what are the risks, what is the environmental condition in which we're working in, particularly from a security aspect, and then we will, along with those assessments, have detailed discussions on what should the security profile be from a protective standpoint in order for us to continue to operate there.
That was U.S. Assistant Secretary of State Gentry Smith. And let's stick with the Washington story. Fed Vice Chair Lyle Brainerd is testifying in front of the House Financial Services Committee to discuss the growth in digital assets and the need for regulation. Joining us now to really comment on that is Congressman Stephen Lynch, who's part of that committee and has introduced into Congress the Electronic Currency and Secure Hardware Act, or eCash Act for short, which would help craft and establish a digital dollar. Congressman, thank you as always for joining Bloomberg Television. Let's start with one of the big concerns on Wall Street when it comes to the creation of a digital dollar, the idea that it might actually kill the banking system. Why shouldn't it?
Well, thank you, first of all, Kriti, for having me. No, I think that is a major.
Well, this guy has no idea, because he's one of those Democrats from Massachusetts that doesn't want the banking system to go down, because he's a crooked, dirty scoundrel, and why they want the banking system to survive. Us as cryptocurrency slash freedom fighters, freedom lovers, do not need the banking system. We can become our own banks. With freedom becomes with freedom becomes, it's one of those gray areas. If you want freedom, you got to take great risks. You got to understand what freedom is. You got to understand how to become free, how to hold your sovereignty against these dirty banker institutions. Now, I might get a lot of dirty comments in the bottom, but I don't care. The bankers are absolutely controlling the world. And until we get rid of the bankers, we will have no freedom. We will have no sovereignty. The world and the war in Ukraine does not need to be. It's because of the bankers it's happening. There's a lot more going on besides the bankers, but they're a big part of it. So let's listen to what dipshit has to say. Excuse my French if there's any kids watching.
Consideration within the decisions of the Fed and MIT. They have a Hamilton project for developing a CBDC, and the architecture itself will have an impact on and possibly disintermediation with respect to the current framework that involves the Fed and commercial banking. So that's a very important aspect of this. There is need for concern because we have to get this right. That's why I think they're acting very cautiously. Some would say slowly, and trying to get this right.
Well, another one of the concerns, Congressman, with all due respect, is simply one of the positives, I should say, one of the use cases for this is to include the 5% American households that aren't involved in the banking system, that don't have bank accounts. And although that is a noble cause, I have to ask, though, some of these bank accounts also are traced or are useful when it comes to trading or tracing, I should say, illicit activities, illegal activities. Why should a digital dollar be used when bank accounts are so helpful for the safety of the United States?
Well, I think we need to think in multiple.
See how he stutters? He has no idea what he's talking about. So how are banking systems so helpful for the people in the United States when just the other, I don't know, about a month ago, we went to go pull out money out of our banking system, and they told us it would take 4 to 6 days to get less, I don't know, about 10 grand or less. How is that helpful? When you have Bitcoin, if I need 10 grand, it's going to take matters of 20 to 30 minutes, maybe even faster. You send it to Litecoin, it's going to take seconds. You send it to Digibyte, it's going to take seconds. You send it to other altcoins, it's going to take seconds. Why do we need digital banks? Why do we need digital currency when all they do is hold you back and keep you in a debt-based slave system? So this guy can't even answer it with a straight face. I mean, look at him. His bags under his eyes are reaching down to his mouth. I mean, I don't like dogging people or talking bad on people, but you can tell he's full of shit. FYI, just my opinion. Leave comments down below and let me know what you think of the banks.
Terms here. We're not saying that one system would exclude the other. The digital system that I envision and that is embodied in my bill would actually act in parallel with the existing system and act in parallel with the CBDC. So my bill would preserve the anonymity and the fungibility of physical cash because, as we have seen in other countries, especially China, they are pushing everyone into this digital currency that is traceable and allows the government to have full spectrum surveillance on every transaction conducted by their citizens. And we want to preserve some privacy, some anonymity on behalf of the consumer so that every transaction that they make will not be observable.
Or perhaps not observable by a foreign government, say the PBOC, which, by the way, is launching a digital yuan, to your point, but observable still by the U.S. government if we're talking about digital dollar. I mean, Congressman, you've chaired congressional subcommittees on national security, on cybersecurity, and I have to ask, if privacy is a major concern there and a digital dollar essentially removes the layers between the private citizen and the U.S. government via the Fed or via the Treasury, shouldn't that be something that Americans are concerned about?
Not really, Critty. The
Yes,
digital
they should.
currency that is in our bill, as we've envisioned, and we've charged Treasury with the actual architectural design, and let them make the choice. All of the current anti-money laundering and terrorist financing legislation that's in effect right now that covers cash would also apply to the digital currency. So all of those know your customer requirements and STR, suspicious transaction reports, would still be generated and triggered by the use of digital currency. So there would still be transparency at certain levels. Right now, we have a $10,000 limit that triggers a cash transaction report, and that brings scrutiny. It would be the same in the digital context as well.
It's interesting that we're talking about this digital context, because as we talk about digital dollar and all the use cases, to your point, we're far behind when it comes to the rest of the world. There's a digital yuan, as we discussed. There's a digital euro in the making, perhaps launching as soon as next year. I'm curious, though, in the thought process of the U.S. perhaps being behind, and given all of these concerns, what is the downside to having a digital dollar?
Well, it could be very disruptive, as I mentioned early on. So we've got a lot at stake because the U.S. dollar is the reserve currency. We are the envy of the world. When other countries and other investors look for security, they typically look to the U.S. There's integrity there, and we want to maintain that. So whatever decisions we make in this realm will undoubtedly present some risk for us in terms of reputational hits if we don't get this right. So that's the downside here. If we're moving to this new digital medium, then we've got to make sure we get it right and we preserve all of those protections that our traditional system has embodied.
Congressman Stephen Lynch, Democrat from Massachusetts, we thank you as always for your time. Let's get a quick check on the markets here before we head off. The S&P 500 hovering near those session highs, over 2% gains when it comes to the stock market. But take a look at the NASDAQ here, almost 3% on that level as well. And if you actually look at the 10-year yield, it's unchanged. So what is driving this really momentous growth? If you even look at the Russell 2000, 2.4% gains. When you see the NASDAQ higher, the Russell higher, both outperforming the S&P 500, immediately to me, that screams a momentum trade. And of course, we are looking at a VIX that has now dropped to a 27 handle. We're going to stick with the market story as, once again, I repeat, they are hovering at session highs. More conversation coming up next. This is Bloomberg.
I'm John Oracle. Welcome to Bloomberg Markets.
And I'm Kriti Gupta. Let's dive into the price action. Green on the screen when it comes to the S&P 500. Over 2% gains when you look at the stock market. I'm just going to focus in on the stock market here because there isn't a ton of action when you look at yields or the dollar or even oil for that matter. It's really all here. And really, look, check this out. The NASDAQ, the Russell 2000 up over 2% as well, both outperforming the S&P 500. When you see that, John, it screams momentum trade. And this time, though, kind of driven by retail.
It certainly is, Kriti, whether it's Dollar Tree or Dollar General, both of those companies pleasing Wall Street and their stocks surging after we've had so many disappointing retail stories. And I would add to that the takeaways from Macy's financial picture as well. And yet we are reminded of the challenges that other companies are dealing with right now. Our Bloomberg colleagues reporting on PayPal cutting staff as they try to deal with their cost pressures right now. So those headwinds, there's still plenty when it comes to the world of corporate America right now.
For sure. Those retail stocks gaining, as you point out, but consumer headwinds still persist, mainly inflation. Check out some of the voices discussing those price pressures at Davos this week.
Inflation is no doubt trending higher, and it's way higher than our inflation rates throughout the year.
As far as the cost is concerned, we
going to have more conflict. We're going to have more inflation.
Sorry, I gotta stop the video. What does it say in the background? World Economic Forum. So we are going to. How does this guy know? Does he have a crystal ball? Can he predict the future? How does he know we are going to have all these issues? It's just like monkeypox. It's just like, I don't want to get kicked off my YouTube channel, but it's just like the jab, the vid, all that nonsense. How does he know we are going to? So a lot of this crap is done by design, and until you guys realize this and be prepared, not scared, understand what these monsters are doing to our economy, and this is global. It's not just one country. It's not just one uh, little section of the globe. It's the world. Let me know what you guys think down in the comments below on what you think about the World Economic Forum. That will be a awesome topic to cover, and I would like to know what your guys' opinions are. Let's listen to this moron, Ray Dalio. A lot of you guys know who he is and how he so-called the future of this market.
Causes domestic political conflict.
Raising interest rates is not going to solve the problem of inflation. It's not going to create more food. It's going to make it more difficult because you aren't going to be able to make the investment.
The critical thing for us is not to see kind of second round effects happening, not to see too much broadening of the things that are increasing in prices, and very importantly, as you mentioned, to make sure that the medium-term inflation expectations remain anchored.
Let's bring in Arun Sundaram, CFRA Research Senior Equity Analyst. He covers retail, of course. Thank you, as always, for joining us. Let's dive into perhaps the results we got from this morning. Macy's, even Nordstrom earlier in the week saying what inflation concerns, what margin pressures, essentially saying their consumer is far more well prepared, perhaps, for these inflation headwinds. But I have to ask, how much of those results are simply a legacy or even a remnant of the wealth gap coming off of the pandemic's legacy?
Yeah, I mean, first of all, I think it's reassuring to see some of these retailers post some nice top and bottom line beats, especially after last week's scare with Walmart and Target. I think now we're finally learning that not all retailers are kind of created equal, and there are some that are outperforming others. And we saw really good results from Macy's today. We actually upgraded Macy's to a buy today, and then one of the reasons why is because we're starting to see this pretty massive shift in consumer spending habits. With COVID restrictions starting to loosen up, people are returning outdoors again. You're seeing a lot more occasion-based apparel purchases. You're seeing things like beauty products doing really well. And a lot of these retailers, what we learned is the ones that have a really strong omni-channel presence, digital, in-store, and then even within their store base, they have different store models. And those are the retailers that are really outperforming right now.
Well, certainly, in staying with that Macy's theme, Arun, the fact that people want to get out and maybe go to a wedding or some summer event and they go to Macy's and buy something, that seemed to be one of the short-term benefits. But even speaking with Bloomberg Television's CEO, acknowledging those supply chain issues are continuing, and that is a concern for their company even as you go through this summer and get ready for something like back to school.
Right. I mean, we're still seeing supply chain issues. I think one positive is I think the environment is getting a little bit better. For example, some other retailers reported today, Dollar Tree and Dollar General, they are starting to see some ease in terms of supply chain pressure relative to Q4 of last year. Still, relative year over year, it's still pretty tough for a lot of retailers, but it does.
This guy is so full of shit. When I went to Dollar General, there was nothing at $1. Sorry to stop the video, but there was nothing at $1 cost. Everything was $1 and above. So listen to these people if you want to. I take them with a grain of salt. Anything they say to do, I do the opposite.
Sound like things, maybe the worst has come by and things are starting to lighten up a little bit for some of these retailers. And for some retailers, we're not talking about inventory shortages anymore. Some retailers are actually noting, too much inventory. So the narrative has, pretty rapidly shifted over the past 6 to 8 months or so. And now we're seeing different kind of challenges for the retail industry.
Well, let's stick with those challenges because it seems like inventory buildup was such a big part of the conversation, but are today's earnings just saying, well, maybe that inventory buildup, those supply chain issues, do they not matter anymore?
Well, I mean, one of the reasons why the inventory is kind of building up like this, the dollar value, is just because of just normal cost inflation. That's one of the reasons why the inventory is elevated on the balance sheet of just about all these companies. But yeah, another reason why is many of these larger retailers have been pretty aggressive on their purchases. A lot of these retailers made really large bets end of last year, especially before the holiday season. They were chartering ships, things like that, just to get their shelves stocked ahead of the holiday season. And that really paid dividends during the holiday season. But now we're starting to kind of see the tail end effect of that strategy. And now some retailers are left with some excess general merchandise items, and the only way to kind of get rid of that is through these heavy markdowns, and that's what's kind of impacting retailers like Walmart and Target. But for some other retailers like a Dollar General, Dollar Tree, they don't have these bigger, bulkier items in their store. Their products are smaller. Takes up less space, so they're not experiencing those similar headwinds that maybe a Walmart and Target are experiencing right now.
No doubt, a helpful breakdown, Arun, of some of the different components of that retail industry. Arun Sundaran joining us from CFRA Research, where he's a senior equity analyst. Thanks very much. Coming up, as we mentioned, it is not just retail on the move higher today. Big tech in the spotlight. More on that sector next. This is Bloomberg.
This is Bloomberg Markets. I'm Kriti Gupta with John Ehrlichman. Apple planning to keep iPhone production roughly flat in 2022, a conservative stance as the year turns increasingly challenging for the smartphone industry. For more, let's bring in a true expert, Anurag Rana, Bloomberg Intelligence senior analyst covering software and IT services. Anurag, thank you as always for joining us. Let's start with the fact that they're keeping their production flat. Is this a temporary thing when it comes to their long-term plan, especially when they're kind of dealing with those margin costs, higher wages, higher inflation even? Your take?
In my view, flat is not bad. Frankly speaking, because if you were to look at it, iPhone numbers are already, I think that we already expected that to happen because of supply chain problems in China because of COVID. Now, as I've said it many times, for us, this is not demand destructions.
Notice how everything is blamed on COVID. COVID. Now it's blamed on monkeypox. Monkey shit. That is BS. Excuse my French. I hope there's no kids watching. But it's one excuse after another. All this is done by design. And until you guys realize this, you will stop being scared and be prepared of what's coming. They are telling you what's coming. How do you be prepared? Stock up on ammo, guns, food, water, supplies. Get involved with your community. Meet anyone you can, because community will have each other's back. They are letting you know what is going on and what is going to happen in the future. So let's listen to what the rest of the idiot has to say.
People just don't give up their phones. It's a question of extending the refresh cycle. So if you have a massive install base, let's say about a little over 800 million iPhones, and the refresh cycle is, let's say, 3.5 to 4 years, you're going to sell over 200 million units every year, irrespective of what's happening. So I think that's really where the catch is. In our view, it just gets pushed out by a few months. This is not destruction in demand for us.
Anurag, obviously a story like this is a reminder of how deeply tied a company like Apple is to China, both as a consumer market and clearly on the production side. And I know you and the Bloomberg Intelligence team have done a lot of number crunching on that front. Can you just share some of those numbers with us?
Yeah, see, for Apple, the biggest issue is that majority, almost all of their products are assembled in China. So this is an issue for any reason. If US and China have, far more geopolitical problems going forward, that does not bode well for Apple, and it really needs to expand that supply chain and go into different areas, different countries, different geographies. And I think that remains, in our view, the number one risk for Apple. But from a market point of view, China is an important market for them. I think roughly 20% or so of the phones are sold there. So it is an important market, but I think supply chain is a bigger issue for them.
An important market for China, but not the primary maker of smartphones, if I am thinking about this correctly. But I have to ask, does it plan to get there? Does it plan to become the primary supplier of smartphones in China, and how does it? Quickly, Anurag.
No, it's not going to be possible because of the price point. Apple is a very highly, higher priced phone, so it's not going to be the number one phone seller in China just because of that. But having said that, I think it is always going to be an aspirational brand for any time somebody shoots up the. If you become a little bit more rich, then you're going to go out and go for an iPhone.
No doubt. Anurag, thanks for your analysis as always. Anurag Rana from the Bloomberg Intelligence team on Apple. And staying with the technology area, Kriti, we've been watching shares of NVIDIA moving today. Right now, higher. Obviously, the market was trying to digest the latest quarterly results from the company, and someone who's been tracking those numbers, Mandeep Singh from the Bloomberg Intelligence team. And obviously, the supply chain is front and center with this one too, Mandeep. The revenue, it's a reminder of how strong this company has become, but not immune to some of those supply chain challenges as well.
Yeah, and look, I think if the gaming segment, which is exposed to more of consumer device shipments, that is the one where, market is not clear in terms of whether it's going to grow 20% in the second half or it's going to slow down to mid to high single digits. My sense is, look, we know, consumer device shipments are slowing. And you can see the price of discrete GPUs in the open market, it has come down. So clearly, the demand tailwind that we had for the last 2 years, both on the enterprise and consumer side, is not as strong going forward. And so that will result in some tapering of the growth rates. But at the end of the day, NVIDIA is exposed to AI, and it's making chips that, Intel and AMD don't have in terms of the configurations and the processing capability. So clearly it still has a lead in terms of technology, but there is some demand deceleration on the consumer side for sure.
Demand deceleration, a key point when it comes to tech earnings and really the economy broadly, but so is diversification. And NVIDIA, of course, isn't the only one in the news when it comes to that. Broadcom, of course, making a $61 billion deal with VMware. One of the stories there is simply their kind of idea of acquiring and diversifying themselves from a chip maker. But I have to ask, NVIDIA did that as well in terms of diversifying what kind of chips they make. Is this something that's going to hit the chip space broadly?
Yeah, so chip space is cyclical, and this time it's going to be no different. The question is, how much of a tailwind AI can provide? Because AI has become table stakes for every enterprise. We know public cloud is investing a lot, and you add the metaverse and all the new stuff that keeps coming, autonomous side. It's all driven by semiconductors, and that was the big driver. But when it comes to NVIDIA, they keep talking about automotive design wins, but it hasn't translated into revenue. So that is where, the new pockets of revenue have to show up in the income statement. We haven't seen that yet translating into growth, but I think that is what investors are keeping an eye on.
Well, you have to keep on a lot these days, Mandeep, including every Elon Musk tweet. And he did just tweet about Jack Dorsey, the co-founder of Twitter, leaving the board of directors. Obviously, everyone was watching the annual meeting yesterday, saying he wished that Jack had stayed on the board, but I understand the need to move on. Things continue to move with this story, obviously with the updated financing plan for this deal. Mandeep, where does this one go?
Well, so I think financing is getting harder and harder just because of where market is right now. And you can't expect new partners coming in, to add to the, the $6.5 billion commitment that the other co-partners have given. So Elon, at this point, has to raise the money himself, either by selling his Tesla shares or, some other way he has to finance it. He doesn't want to do the margin loan, which is the right thing. But at the same time, you can't expect people to come in at this valuation given the current state of the market.
We'll keep watching, Mandeep. Thanks, as always, for your analysis. Bloomberg's Mandeep Singh joining us. On the subject of social media stocks, by the way, they have been struggling, including Nextdoor, which went public last year. My interview with the CEO next. This is Bloomberg. This is Bloomberg Markets. I'm John Oakman along with Kriti Gupta. For what it's worth, $686 million. That's how much money Nextdoor raised when it went public last year. Nextdoor, a social networking platform focused on neighborhoods. CEO Sarah Friar was in Toronto this week as part of Nextdoor's expansion. And while growth stocks are out of favor, she says Nextdoor keeps growing.
So every time I think we go through a market crash or whatever you want to call it, you're like, God, I hope I don't live through one of those again. But here I am. I lived the tech bubble, clearly the financial bubble. I was at a bank at the time, and now I don't know what this one is. I guess it's the COVID hangover. Certainly it's been a long bull market we've lived through. I always come back to my employees and ultimately my customers to say, let's control what we can control. You just have to build in these moments and not get overly focused on the market itself. How will Nextdoor continue to rise to meet this moment? Well, one is we are helping people in their time of need. Sometimes it's extreme, right? The war in Ukraine caused neighbors to fundraise, neighbors to let other neighbors in their front doors, to sleep in their spare bedrooms. And they were doing that on Nextdoor. Sometimes it's help me find the lowest gas prices, right? Inflation is a real thing right now. So helping people shop wisely and smarter. And then sometimes it's because they're going to either find dollars and cents in their closets, for sale and free is good for that, or to make a purchase in a way that's much more palatable. These are the moments when Nextdoor can really be there for our customers, broadly defined. And that's what I tell my team. I'm like, forget about the market right now. Go back to purpose. That's what keeps people locked tight at your company, keeps them building, and ultimately the great companies rise.
Well, you raise an interesting point because there's a common narrative in the markets right now that investors are moving away from growth companies. But as a growth company, you're saying we can stay focused on growth?
Yeah, I mean, actually, in inflationary environments, ultimately, people come back to growth because that is the only way to create growth in a stock price. Because if multiples are not going to expand, then you need to make sure earnings continue to expand. So if you go look at economies like Japan that have been through long periods of even stagflation, it's actually growth stocks that in the end that have been way more performant. So I don't know when that turn will happen, right? Markets, and when you watch them long enough, it feels like they're going to go down forever or they're going to go up forever. And the reality is, of course, they make a turn. I don't know what course corrects that. I have no ability to steer the macro environment, but I can steer my micro environment with my team, a fantastic team. In fact, we're hiring here in Toronto. It's a great tech center for us. But again, back to controlling what we can control, which is a great outcome for our customers.
It was just a few months ago that people couldn't stop talking about the blockchain and the future of crypto and Web3, the metaverse. And as a leader, you have to be on top of those things too. What happens to all of those ambitious things we were hearing about from everybody just a few months ago when we're now going through this downturn? Do you stay focused on those areas too?
Yeah, I think you have to. So in my mind, it's actually good sometimes to take some froth out of new technology areas because it gives everyone a little bit of a chance to catch up, and you're not chasing maybe things that are spurious to that topic. Web3 for me is absolutely a thing, right? We're shifting from Web 1 where you could read, like remember back in the day when we would read the weather online or read Yahoo before it became interactive. Web 2 where now you could read and write, and the advent of the mobile phone just changed everything. Web 3 is the next big shift in my mind where you will be able to read, write, but transact. So a lot of the transaction pieces get written into the software itself. So money actually moves, or currency value moves in the software, smart contracts. You're shifting to an age of community. So really giving communities back their power. I'm excited about this. I actually joined the board of a company called Consensus. It's a private company, probably best known for MetaMask, which is one of the largest, it is the largest, in fact, crypto wallet in the world, because I want to learn more and I want to see how we can bring that into even a platform like Nextdoor.
That was Nextdoor CEO Sarah Friar.
Yeah, fantastic interview, John. As always, thank you for bringing that to us. Quick check on the markets. The S&P 500 up 2%. The NASDAQ up almost 3%. John, this is a green on the day screen. A lot going on. Stick with us. For John Ehrlichman, I'm Kriti Gupta. This is Bloomberg.
So yeah, guys, let me know what you think down in the comments below on these topics. what she had to say was almost dead on in the crypto space. I do agree. The next topic's coming out of Cointelegraph, and this one has to do with oh, I'm sorry. No, next one's coming out of Bitcoin Magazine. My bad. These public oil companies are joining forces with Bitcoin miners to reshape the industry. And this is huge, guys. So pay attention to this. One of the world's largest industries, oil and gas, is converging with magic internet money. Why do they call it magic internet money? Put that comment down below. Let me know why you call it magic internet money when it's not magic. It's all about using blockchain technology. It's about building on what was made to transition the world into a better place than what it is now. So I'll continue on with the article. It is converging with magic internet money infrastructure, but Bitcoin's prolonged market sell-off has taken some of the shine off these monumental partnerships. Some of cryptocurrency traders are even facetiously asking if energy will be a new bullish narrative for Bitcoin, bringing wind to fill its metaphorical sails as the leading cryptocurrency sits over 50% below its record price, highs from late 2021. Now, what I don't like about this article is they always go 50% below of its record price highs. They never talk about what its record price lows was back in 2017 or 2018 or 2019 or the end of 2019 and beginning of 2020. So once they figure that out and they release it to the public, Bitcoin is on a upscale model, not a downscale, but upscale. So Bitcoin's on a long-term investment, so a store of wealth. Is it going to become a asset to where one day it takes over the monetary policy? It could be, but right now Bitcoin is on an upscale. It's not on a downscale. Once it gets below $800 a Bitcoin, then come talk to me. But right now it's on an upscale. So the article goes about and says, we won't read this part, but North America mining partnerships. In the news media and general discourse, the focus on partnerships between miners and oil companies has primarily centered on North America. Most of this attention is being paid here for good reason, as several of the biggest names in the oil industry are working with North American miners. And that's huge, guys. In 2021, ExxonMobil reported annual revenue of more than $285 billion, with global daily production during the same period reaching more than 2 million barrels per day of oil and gas. This titan of oil industry is also reportedly working with a Bitcoin mining company in North Dakota. If you guys ever been to North Dakota, it's awesome. I've been there. I used to do electrical substations and wind farms, and I've done a lot of electrical there. So in North Dakota is huge. That's where all the people don't want to go, but if you really want to go to earn income and earn a good wage, you go to North Dakota because they need people all the time. So if you need a job in the wind industry and the substation industry, you go to North Dakota, or in the oil industry. Working with Bitcoin mining company in North Dakota to turn otherwise wasted gas into energy for mining operations. This news spread like wildfire through the Bitcoin community when it was first published, but some of off-grid mining teams already knew that Exxon's relationship with miners in August 2021. For example, Giga Energy co-founder Matt Lostor said Exxon was already selling some gas to miners. So go ahead and read through this. It's at Bitcoin Magazine. That's the article, and it talks about these public oil companies are joining forces with Bitcoin miners to reshape the industry. The next article is coming out of Cointelegraph. This is where I got the. This is where I got the how does crypto change your life, right? So Crypto Wendy O is another person that I've been following, and let's just listen to a little bit of how crypto has changed her life. This is Crypto Wendy's story right here. So
How has crypto changed my life? Well, this was one of my most favorite topics. I'm a survivor from mental health and from those types of issues. I had a really rough upbringing. My dad passed away when I was 11 years old. I grew up very, very poor, and I experienced a lot of trauma growing up. That trauma stuck with me for a long time, and I always thought, I wouldn't be able to get out of poverty. I wouldn't be able to improve my quality of life. I just had to deal with this 9-to-5 job working.
Not to stop the video because I respect her and her story, but I have the same type of path. I grew up in poverty. I worked my way to an honest living, at least what I thought was an honest living. So as an electrician, as of getting ahead in life, I bought my first house. I then realized what Bitcoin can offer by selling my first house, using that income as capital towards a new industry, and not investing it all, but diversifying my risk. Buying food, buying in a place where I don't have to pay a mortgage, buying extra gasoline, buying extra diesel, just being able to live off my means and not live over my means. And a lot of Americans don't understand what it means to live not competing with the Joneses. If you're competing with the Joneses, that means you're living paycheck to paycheck. I've been there, done that. You don't want to do it. So let's listen to the rest of her life. We won't play it for too long because we got a couple more topics, and then I'll let you guys get back to spending time with your families and such.
Being in healthcare, getting mistreated by the corporate office, getting mistreated by some of the clients, and just have this really shitty quality of life. But until I started changing my thought process, and that's when my life started to change in a positive aspect. And crypto was a really, really important part of that. I remember sitting in my car waiting for the office to open, the medical office that I worked at. And I realized that the world around me didn't care about me. The only way that I was going to get able to get a better, improved quality of life was changes that I made. I kept hearing about Bitcoin on the radio.
What's going on, guys? Today, Bitcoin is claimed to be the gold of the industry.
So I decided to go ahead and take a plunge and invest, be a little bit risky. And that was kind of a really cool thing to do because I never thought in a million years that I was smart enough to teach myself to do anything. But actually working in healthcare kind of forced me to do that because in healthcare, you do have to learn basic dosage calculations, to learn to deal with and kind of coordinate, communicate with a lot of different people. So I took those skills that I learned from healthcare and I apply them to crypto, I apply them to trading, and it helped me become a pretty decent trader, which is cool. Never in a million years did I think I was going to be some content creator. I don't like the way I look. I don't like to be on the internet. And getting shit online for just existing, it's not a fun feeling. For a long time, I was one of the few female voices in the space. So to consistently have people make up lies about you, say really terrible things about you, comment on the way you look, the way you talk, call you an idiot, isn't really a fun, welcoming thing. But at the same time, I've been able to create this really, really dope community in crypto with like-minded people who are interested in improving their quality of life, who are interested in advancing in the world. And that was all done with crypto. And I really think it had to do with a lot of the events that I hosted. I was able to network, to bring people together, to meet people. And at the end of the day, even though we're different when it comes to how we look, our cultures, that type of thing, at the same time, we're all in crypto to improve our quality of life for ourselves and our family. And I think that that's really powerful and really dope. And one of the things that I realize is people who are wealthy or people who are successful entrepreneurs, they take chances. All those chances could be disastrous at times, but at the same time, if you do not take a chance, you're not going to know if you're going to be successful or not. And I think part of joining crypto was part of my journey in becoming successful and changing my life in a positive aspect. And I'm actually very, very grateful for Bitcoin and crypto because without it, I wouldn't have taken this chance and I wouldn't have learned what true entrepreneurship was.
So yeah, guys, that's how Crypto Wendy changed her life in crypto space. Let me know how you guys change your life, if you've changed your life. If you want to change your life, I got a great interview coming out. It's going to be on my Patreon. It's $5 a month. It's with, well, I won't say who it's with. You just got to go check it out. These two people are awesome. They've both been in the mining industry. They've both been in cryptos for a long time, and they both understand what it's like to live your life in crypto. They know what it's like to 1000x your life, to 100x your life, to 50x your life. Anything in your life that has to do with getting out of the debt based monetary fiat slave system. And I won't say it anymore, but I said it enough. So the next article is coming out of the Daily Hodl. Excuse me. So Stellar Foundation joins effort to create digital currency pilot project in Brazil. Now, what you guys don't understand is well, maybe some of you do, is all these companies and all these countries that are developing crypto and other foreign countries besides the United States uh, is huge. So we got El Salvador, we've got Turkey. I've covered on my channel. Um, China, I've covered on my channel. All these other countries. I think I've covered Brazil as well. But this one has to do with Stellar. Now, Stellar is a project that I've looked into. If you guys want to know more about Stellar, leave comments down below. There's not enough comments being left, but leave it down below. Let me know what you guys think about Stellar, where they're going, and how they're going, and what you guys think about them. So again, this article is out of the Daily Hodl. It says Stellar Development Foundation is partnering with the leading crypto exchange as part of a wide-ranging test program seeking to expand Brazil's blockchain industry. In a new press release, Stellar says it was selected along with the Mercado Bitcoin exchange as one of the 9 participants in the Challenge Real Digital project. The project was created by the Central Bank of Brazil Financial and Technological Innovations Laboratory to explore possible use cases of central bank and digital currency. Now, do I believe in CBDCs? Absolutely not. Do I believe in custodying your own crypto? Absolutely. But there are going to be those people where they want to believe in CBDCs, which is fine. We can't help change everybody's minds. If they believe in CBDCs, more power to them. The only thing you can do is help educate, and that's what this channel is all about. If it wasn't for me wanting to bring information to you guys to help you understand what educating yourself and self-custodian crypto was, I would not have a channel, because I want to help the average Joe, the average person, get into crypto, get into it correctly, and understand what self-custodial means. You don't want to be a part of a CBDC. Even though this help brings adoption to crypto, which will help you, if you're in crypto the right way, become more sufficient, become your own bank, become your own everything that you want to become without having the noose around your neck. And I mean in all ages, all colors, all genders, all of that. So stay away from CBDCs, get cryptos in your own possession, become your own bank, understand what it's like to live the crypto life. And I keep posting it on my YouTube channel, and I will keep posting it. Become your own bank, get your cryptos out of exchanges now, and live the crypto life. If you don't understand what I'm talking about, links down in the description below. You can set a one-on-one meeting with me or some of my other partners that I partner with, Bitcoin Consultants Worldwide, Litecoin Leader, Divvy Daddy, even though he's not too much in that, but I'm sure he'll help you if you really need help. All these people will help you live your crypto life. So I'll finish it up with this article. Um, Down here it talks about the Stellar Network. Stellar Network is prepared to support Mercado Bitcoin, and the Central Bank of Brazil as they explore use cases for the real digital future. Stellar was designed for asset issuance, sorry about that, and its built-in compliance tools give Mercado Bitcoin a strong foundation to develop a solution with the features that Central Bank of Brazil expects to see. The non-profit SDF was created in 2014 with native token Stellar Luminous XLM used for staking as well as to pay for network services. The Central Bank of Brazil provides information about all 9 test projects here. Check price action, don't miss the beat, follow us on Twitter, surf the Daily Hodl Mix. Now guys, I've been in Stellar for a while. They got a great project. What they're doing, do I approve of? Yes, because it's all about adoption. You're going to have the people that want cryptos, you're going to have the people that want centralized cryptos, and you're going to want people that want decentralized. I'm all about the decentralized platform and how to get cryptos in your own possession, become your own bank, live the crypto life. And once again, thank you guys for watching. If you like this video, share it with everybody, subscribe to the channel, don't miss a beat, watch my Patreon channel. If you got $5, you want to pay for a month, join the Patreon. This weekend I will be posting a video with 2 smart minds from the crypto industry. It will hit Patreon only. I'll leave it there for a few weeks, let my Patreon subscribers hit it. But these guys, I mean, they've been in cryptos forever. They understand what cryptos are. They've mined it. They lived it. They've taught me a lot, and I follow a lot of what they say, and I understand what they're talking about. Thank you again for watching this video. Smash the likes, subscribe, share with your family and friends. And once again, thanks for watching. Hope everybody enjoyed the show. God bless, and have a wonderful day.